All right. Hello, everybody, and welcome to this live broadcast. I could take off the stay tuned because it's happening right now, baby. It's happening. Glad to see you out there. Crypto, technical and fundamental analysis. Let's get to it. Let's jump right in. While I'm setting on my screen, I'm going to share with you where I'm trading. This is the index, the exchange rather, that I'm using. This is Gate IO. And this is live right now. So we are on a 4-hour ticker, 4-hour candle right there. Each one of these lines represents a 4-hour time frame. That's what that means. And as you can see, we broke through the triangle right there. Look at that. So the last time we drew it, the last time I broadcast it, was at this point right here. We charted a new triangle D. The old one was the purple one. The new one is the lavender one. And you can see that it broke through the purple and it held, tested here along the lavender line, and then broke through, tested again and broke through and pushed down hard. We had a couple small dots here, which indicates not a lot of volume, but consolidation and pressure buildup. And then also we had the stochastics here. We had a stochastic crossover where the which is a bearish cross right there, and also right here in alignment on the MACD with more volume coming in and pushing this down. Now let's take a closer look here and see on these moving averages up here. You can see they're kind of thin, but you can see all the moving averages are in a downward trend. Okay, so what does this mean? This means that if you were a bear and or if you followed my advice, if you're watching my channel, then you kind of knew that to expect this actually. And the big question now is, to me, is one, we're gonna do when this turns around, we'll do another Fibonacci retracement. And let me enlarge this. You're probably having trouble seeing it, right? I see that in the comments. Okay, yeah, here we go. So let me enlarge this for you. We'll go full screen. There we go. That'll help you out. Okay, so now that we got this full screen, that's the triangle that I drew my last broadcast, this lavender one. And you could see my last chart point was back here. So this was a few days ago on, well, this was the 3rd. And then this is the 5th, 6th. And here we are. Today is the 7th. It broke through. And also, I would like to note that if we look at this column that's going right here, up and down, we see these lines, these horizontal lines. Let's see if I can light them up for you. This line right here, look at how when we had the push through, when we had the breakthrough, look where it tested, look where it bounced. Look at that conversation. Look at that conversation. It's right here. It's on this line, and this line right here, they're kind of looking at this line too. So this support, it just blasted right through this support level, blasted right through, hesitated here, which is about 33,483. And now we are down at 32.6. All right. Now, so this is a 4-hour candle. Let's jump into a let's jump into the 1-hour candle. See what the 1 hour, so see what the conversation looks like on a 1-hour time frame. So here's what we got. We came down, we tested the bear there. We're going back in time here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 hours ago, okay? 10, 11, 12 hours ago. This is 12 hours ago, this candle right here. This is 11 hours ago. This is 10 hours ago when it broke through, okay? Because each one of these candles represents 1 hour, and this is the current candle we're on. Now, look at this. It came down. There was a big major push down. They were up here at like 35. this is 36,500, this candle. And then the bears just yanked the range, pushed it down, took it down to the edge here. The bulls created a green candle, tried to resist right at the edge. Look at that triangle pattern, though, people. This is what I'm telling you. This is why when you have a consolidation moment, when you have choppy movement that starts moving sideways, there's not any parabolic launches one way or the other. This is where you want to draw triangles, because it really does give you a good idea of non-horizontal support and resistance levels. These are because they're diagonal. This is a diagonal wall that the triangle forms. And look how well it tested. It came down here. This wick just barely broke through, but it tested. Now that's kind of dipping its toe in the water. Then the bulls took over, pushed it up. Another conversation, but when the bears had their chance again, boom, they blasted it down. Bulls resisted. Bears said, no way, Jose, pushed it all the way down. And the bears had some more resistance here at about 33.7. That's a little bit of a conversation here at 34.1. And we're having a conversation here at 32. Now let's zoom out and take a look. What my predictions were. Well, I could tell you, and I could do better than that. I could show you. Before we do, I do want to point out that what the stochastic indicator, the RSI, is showing us here, if we look at this, is that it wants to always move back to this colored band. So when it gets outside of it, this means it's overbought, and the stock will pull back into this trading range. When it's down here, it's underbought, and it will move back into the trading range. So we can expect that the bulls will be able to take this over. Are they going to be able to push it all the way back up from here? Are they going to be able to push it all the way back up over the next 10 hours back into the triangle? Or are we going to continue some downward momentum? My theory is we're going to continue some downward momentum, and I'll show you why. Because here's where we topped out at the triangle here. This date was the 3rd. Today's the 7th, so that's just 4 days ago. Okay. So will we consider this downward trend? No, not necessarily. It's sideways chop. But this right here is a downward trend, and like it or not, these levels will be tested. And here's why. If you look what happened back on that tragic day of May 17th, when we created this huge long needle all the way down here to 30,000. This line right here, you could see, is a huge support line at $31,000. So between 30 and 31, this is where I think the next battle is going to take place. So where we're at right now, yeah, it's going to flutter around, and it might even move sideways. But here's the thing, folks. This is a big major push. We haven't seen a push down this far since May 29th. And at this where we touched it here. And this is where they were on May 29th, right in that same vicinity. Before that, it was May 23rd. And they pushed it down all the way through 30, through this 30. And I said, what did I say? If you look at the base of this triangle, that if you go to the top of it, it sits at about 40, 41, and the bottom is around 30, 31. So these little widgets are going to, these can act as spring zones where they kind of charge up to it. And either if they break through at the top, it's going to find a new support level above 40, and it's going to start. It has the possibility, if it creates a new candle over 40, that it'll start trading in this kind of blue range right here, which is more of like a 38 to kind of 48 range, testing 50. All right. So you're in the 40 to 50. And even numbers, these even kind of decimal des how you want to say it, every 10 numbers kind of always round numbers. They always seem to form natural resistance. Um, but this can be verified through some chart analysis. And again, these horizontal lines are all this is all of my past uh, Fibonacci retracement information, and these triangles are what I'm drawing. And once it locks into a channel and we see it ping ponging and going wide, testing the top, coming down, testing the bottom, getting narrow, creating a narrow band and widgeting out. Now, the middle of this we saw was about 37,000, and it started having a conversation here around 36 and just poked through the bottom of here. So the bears took control, and this is to be anticipated. Again, why do we anticipate this? Because if we roll back time here, let's roll back time. You can see that where this triangle is created, look at this major conversation that also happened between 30 and $40,000 back in when? The beginning of the year. This date right here, this date range, this point is February 2nd. This point is January 15th. So this is a 15-day span of trading sideways to sideways. Right now, we just did like 523 to today's date, 607. So there you go. This is about 2 weeks of trading. This is about 2 weeks of trading. Let's expand it out a little more if we can. Can we on the 1 hour chart? No. Okay, so we'll go to a 4 hour chart. All right. So look at all this conversation. Now, this conversation that bounced between this green line and this top red line right here in this range. This green line is 30K. This red line is 40K. So, and this was bouncing, finding support bases, moving horizontally in this range, going an entire month. So I anticipate we're going to see a similar kind of situation here where we might see another 15 days. This might bounce off this 30K and continue out another 15 days, maybe even come up and test the high again at 40K. And if it gets rejected, guess what, folks? You're going to see a move like this. It's going to come down rapidly, test 32, that 32K range, and then probably continue all the way down until it bounces off what is this 20K range. This would not be surprising because look at, for years, Bitcoin was trading sub 20K. For years, it was trading sub 20K from 2017. This point right here, this high mark right here, this is $10,000. Okay. It was between $10,000 and $12,000, and it took a while to push up to here. The lowest it saw was way down here at 4K. So after that big, boost we saw in 2017, where this was the high, it fell all the way down to 4K and traded there. So it shot up rapidly, found a new support level, drifted back down slowly over this period of time, this was July 2019. This point right here is September of 2019. So this was, I think, the end of July. This is the beginning of July. So this is 2 months of trading. All of July, all of August, July, August, and oh my God, no, I'm so wrong. This is December right here. This is December when it tapped off of this 7 point. Believe it or not, this was like sub $8,000. This little point I'm pointing to right now, and then it just launched up and just rocket shipped all the way up to freaking $18,000. It made a $10,000 leap, tested this support level here, which you see color coded by purple. And then once it broke through, it was just in stratosphere here, just tasting the rainbow all the way up to 41K before it came down, tested 30, and stratosphered again through another beautiful rainbow flavor all the way up to 60. And then tested 40, came back up, tested 60, tested 50 here, 64 here. I mean, this was not sustainable. This was insane. If you had bought here, you, oh my God, 8 times 60, you 8 times your money. You 8x your money. So you got to think that anybody that bought from where it currently is, even if you bought it now, you still doubled your money more than you doubled your money. We're at the 50-point retracement right now. It was at 64 at its high, 64,000 per Bitcoin. We're at 32 right now. That is half. This is absolutely normal for any stock to come back after it tests, gets consecutive higher highs and higher lows as it did here. It has to retrace, and usually it'll test the Fibonacci retracement levels, which are about 3 points, and then it'll touch down at 50, and it'll retrace halfway. Now, so the question is going to become, to me, is did enough institutional money come in to make this a support level, or was this parabolic shift right here, this launch, this rocket launch, was this retail investors like Wall Street Bets and all this, and before Wall Street Bets, people would have said no, couldn't be retail investors. They don't have that much power to make this type of parabolic launch. Well, they were proven wrong definitively with the GameStop kind of barrage that they did against institutional hedge funds, and they kind of won, right? They stalemated them for an indefinite amount of time. And here's the thing: in the game of trading, you got to realize that there's somebody's going to be holding the bag. I mean, for there to be a winner, there has to be a loser, right? Ideally, we want the little guys to win. We want more of these billionaires' money to flow back into the retail circulation, into the hands of the working class. Because the government's not doing it. They're not taxing them and above a certain threshold as they should, in my opinion, because money needs to circulate for what? For there to be a healthy economy. It needs to circulate. It doesn't need to be, you don't want a glutton, these guys are hoarders. Multimillionaires are hoarders. They take money out of circulation. It's like if you're a body, somebody constantly draining your blood. Eventually, you're going to pass out and die. We need blood to circulate in our body, and money is what needs to circulate. It is the lifeblood of any economy. So, this story of Bitcoin is a bit of a hero story. We do need retail money to come in to prop it up so we can kind of take on these old traditional systems, legacy systems that they have in place. And they're going to want to seize power. And and this is the conversation that is happening right now and has been happening forever. But this technology of Bitcoin is new to our collective memory. It has not existed for more than the last 20 years, has come into vogue. I'm talking about blockchains about over a little over 20 years old now, but Bitcoin itself is a little over 10 years old. And so this is, has the opportunity to be kind of the people's store of value, digital gold, a digital asset that is transferable a lot easier than a lump of metal that, what are you going to do? Mail it to somebody in another country? This is instantaneous transfer of wealth that you own. You should be able to send it to whoever the damn hell you want to, anywhere in the world, and you should be able to receive it as well. We need a currency like that is borderless. And this is what the promises of Bitcoin, and by the word promise, I mean not that somebody's promising that to us, but I'm talking about its potential if we can reach it. So let's jump back into our chart analysis after my little rant right there about why I'm excited about all the possibilities of what has been built thanks to Bitcoin and the blockchain and Bitcoin and all everybody working at the Ethereum team that just made all of this possible. All right, so this big peak right here was, let's see what this date was, December 2017. 20,000 plummeted all the way back down. It took only a month to go from 20 down to about 4,000, pushed back up, and took like 6 months to reach back up to 13, fell back down, struggled, tested like that $4,000 level again. And this is interesting. If everybody wanted a 10x, everybody loves to talk about 10x, 10x, 10x. We see these numbers repeat, and it's not a coincidence. But look at this. It tested 4x, tested 4x again, launched up over 60 C, and so that it could fall back down, eventually settling at 40. I believe just looking at these, that 4x of 4K would be 40. So I think eventually Bitcoin will find a home, a new solid level of support at 40K. But again, how low will it go? Will it drop into the 20s before it says, and test bounces off this level? I think this is logical. I think it could. I mean, if you look at stocks, they usually do retrace and test and like find different levels of support. And this one's kind of a rocket launch. It wouldn't. I mean, it could go as low as like 13,000. I don't think it will though. 15. 17, but here's that 20 is a really strong number. Will it get into the 20Ks? Nobody knows. Here's the thing, people. Right now, if you buy Bitcoin right now, don't worry about day trading it, just hold it, because this coin will test. Probably, I would say it is, I guesstimate 120K minimum in 4 years. So if whatever you buy today, just buy it and say, you know what, I'm gonna 4x my money, but it's gonna take 4 years. And if you go into it with that attitude that you're just gonna hodl for 4 years, you will absolutely, more than likely, nothing is 100% in life. Okay, let's just make that clear. So I can't say absolutely, but I can say very strong indicators, and it is more than likely that you will at least double, probably quadruple your money, and maybe even have an opportunity at a 10x. Here's the reality: 10x opportunities existed only for the rich in America prior to 2016. There was actually a law in the books that you had to be an accredited investor to invest in startups, tech startups included. If you weren't an accredited investor, meaning that you had a net worth of $1 million, make myself big for this message. Unless you had a net worth of $1 million, or you could prove to the federal government that you made $60,000 a year, 3 years or more, 3 consecutive years in a row, you were not able to apply to get the voting right, basically, of an accredited investor. which gave you the opportunity to say, hey, this person's responsible enough with their own money that we're going to let them in the game. They can have investment rights, that right to invest in startups. So basically, if you weren't a millionaire, you were benched. You were not in the game. You were not allowed to invest in a startup, regardless of if you saw it way before anybody else and you believed in the technology, you loved the team, you loved the company, you loved everything about it, you knew it was going to rocket shot, whatever. Like it was real tech that you believed in, not just gambling, Dogecoin type stuff. It was real tech. You couldn't put your money in. Now that changed under 2016 under the Jobs Act, and what happened was now all of a sudden, retail investors can put their money into and we had a way to invest it on these exchanges in the form of cryptocurrency. So this is what's continuing. It used to be, NASDAQ and New York Stock Exchange, and you had to have brokers and all this. And that kind of system got disrupted by Robinhood, and some other players that said, you know what? These brokers are like unnecessary middlemen, and they were getting rich manipulating shit. There was so much manipulation going on, but they were just getting a skim off the top of every bet of rich people. And now like the common person can get their money. And this is when we say retail investors, is what we're talking about. It's non-broker trading. You're your own broker, and you're using an exchange that you have access to through the internet. And you learn to read your own charts, and you learn to do your own fundamental analysis, which is just paying attention to the news and watching how certain things and certain people can say shit in the news to make the needle move up or down. Um, you know who I'm talking about recently. And but it could be anybody. And here's the thing, that's one way of a whale to influence the market, directly or indirectly. Wink wink, nudge nudge. It's pretty direct when they do it so publicly. But you know I would have to say I am a fan of Elon, but we have to ignore this shit because we don't want regulation in this space. And I feel that there's going to be manipulation, so that they're going to try to make this big show of it using news channels that this space needs regulated. Otherwise, look how volatile it is. And oh man, these poor retail investors can lose their shirts off their back if we don't baby them and take care of them. You know, there is a place for government in society through police, and it should be hospital systems. Fire departments are socially funded through our taxes. This is all well and good. However, when it comes to private industry, private business, the government should, again, I don't want to say it should have no place. I'm not a libertarian, because the reality is, as you get more powerful and you gain more of the means of control, it's easier for you to subjugate people. Way easier, way easier. And if you're born into a wealthy family, it's not fair to the rest of us, because it's like entering a foot race, that where you have to run, the first one that can run 5 laps around the track, but some people have a 3-lap head start. Like, no matter how fast you are, you're not going to, more than likely, ever be able to catch up to them, because they were born in that much wealth. So yes, there needs to be a wealth tax after a certain amount. And it's ridiculous when you have poor people. And I mean poor, I mean like anybody making less than $100,000 should not at all be defending people that make $100,000 a month as, oh, they have a right to that money. No, 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 no. Get the F out of here. If you're making more than $1 million a year, then like your money should be taxed at a higher bracket at every dollar over $1 million, because that money it cannot, if you leave it up to them, we've seen it, it gets hoarded and taken out of the system. It no longer circulates. So yeah, sorry, you guys messed it up. You rich people with no moral compass weren't creating enough jobs. You weren't creating enough industry. You weren't innovating. You weren't investing in startups enough on your own. So you lost the opportunity to do that. You guys weren't the angel investors that you should have been. You were manipulators and you actually held back progress. So now this is happening. Now Bitcoin's happening. Now we have exchanges where we can accelerate process. So do not come into the space and put a brake on it. However, do we need their money in the exchange? If you're a day trader and you're trying to make money off the market, they will argue, yes, we want that retail money in here. Here's the deal. For Bitcoin to become a a an asset class, as it is becoming, we do need institutional money here. We need, the banks are buying it because, oh, these rich people want in the game and they don't want to learn all this shit themselves. And it's a little complicated for them to get in, but they see that there's money to be made. So they're trying to get into this system. Just these things. Hold on. This is driving me it's kind of messing with me. There we go. I don't know why it keeps like changing me different colors. Like, what's up, lights? Come on. Anyway, maybe I'm on too much of a tangent, but here's the deal. We do need retail money, but you gotta watch these whales. They're gonna push the price up, and it's like, oh, it's so cool. Like we all have a chance to get rich, and everybody's talking moonshots. Listen, people, you don't need to be a millionaire to have a high quality of life in America. And what we're looking at here, I like Cardano's vision. I like, Charles' vision. From Cardano, his vision to really, we're looking at, is not one world currency to rule them all. That's not the point. But there, we need a decentralized token. We need currency that can be exchanged freely around the world so that we can actually diminish the centralized power system that they have. That's why I'm so excited about this space. So much of corruption revolves around money and influence. And if we can break down that system and crack it, we need to do it. But we need to do it without taking on all of their baggage and really the, otherwise we're going to be open to susceptibility. We're going to become susceptible because we're going to become open to their greed. And when that happens, they can, they can start manipulating this system. And it's going to be more difficult on the fringes for us to create what we want to create, which is decentralized uh, platforms for us to be creative and just democratize the wealth flow to the working class. So let's go back to the charts. I think that's honestly like, I don't want to really say too much more about that, but let's let's take a look one more time at these charts. Let's go to uh we'll see what this daily does. Eh, whoops. Bear with me here, folks. Bear with me. We're reining it in. We're reining it in. All right. At this point, each candle represents 1 week. See how fat they are. They got wider. All right. Let's see if we can. Because I'm streaming, it's moving really slow. So, all right. So this level right here, look at that. Look at this fib level on the weekly. Look at that support level, that line right there. I'm lining up. I'm pointing to it right there. That is 33,44496. And look at how it perfectly intersects that candle push down right there. I'm sorry, this is a daily chart, not a weekly chart. I was like, what? How's that a week? This is a daily chart. The daily candles. Each candle represents a day. I think I said a week several times. That each candle represents a day. But look at that. look at that break, like right there. It broke over to new candle. So we're in this blue trading zone, which technically goes all the way down to $29,000. So we are in this technically, we're in this blue trading zone, but it has to kind of form a new clean candle, a brand new candle. So if this candle can stay in this blue zone, I believe that we will go dip down into the 20Ks. If this candle, this daily candles, which just started, I mean, what time is it? It's 2 a.m. So this is only like representing 2 hours. We're going to be in this candle for the next 22 hours before it finishes. So you can see the wick comes up here up to 33. The bottom wick is down at 32. I believe that we're going to see it get down to easily around here, which is like 31. And this is actually a very strong point of resistance. This is 50%, which is actually lines up with these levels right here. And this is 31014. So, and 313, 31,003 and 30,000. So between like 31,000 and 31,300, there's huge support levels there. And then if it breaks down, we're going to be, it's going to have, it can go down to 30,000 from 33 to 30,000 pretty quickly. And I think we're going to see another support there. And I believe that this will absolutely test here at about 28. And the reason I do believe that is because when we have this many lines of support over all these different charts that I've drawn through the past, kind of lining up, we have two lines right here in that 30-31 area. And then if it happens to break through there, it'll probably dip down to like 29, possibly as low as 28. Um, but I don't know. We'll see. We'll see what happens. Here's the thing. Good time to buy, people. It's a good time to buy. Um, and I think, but I think this isn't, don't fret too much. I think you're going to have another buying opportunity before it'll push back up to 40. It'll test. And then I think it's going to drop down and we're going to test 20. However, the conversation, this is the point where we're really going to need a lot of fundamental influencers. I think the fundamentals are going to be the decision whether this plummets down to 20 and stays there for the next 3 years, or whether the bulls take back over the market and push this up to 60 again, and it's going to start in a trading range between 60 and 40, and then it's eventually going to break out above 60, forming new candles, new highs. When it does that, we should never see this level again for the next decade. And that's going to happen. That what I just described will happen within the next 4 years, before the next halving. That's my prediction. Nothing's written in stone, but you heard it here first. And use the information wisely. Again, are we going to bust out right down here in the 20s? If we do, I'd recommend buying as much as you can, because it's not going to go. I don't see it going much lower than 20,000 ever again. So buy it in the 20s anywhere is an awesome deal. Even right now is a great deal. You'll have your money back probably well within the next couple of years, certainly, and you'll have an opportunity to double, triple, or quadruple your money in the third or fourth year. All right, so that's it for my broadcast. Thanks for watching, and we will see you in the next time, where we're going to draw a new triangle, because this one, well, it just got broke, people. So I am Alpha Magna signing out, and we'll see you on the next one. Thanks for watching.